everyone. This is first day of Bharat Connect Conference. I welcome you all to the call of Focus Lightning and Fixing Limited. Today we have Amit Seth, who is Managing Director of the company. Before I hand over the call to the management, I will lay down the flow of the event. We'll start
And
with a brief intro remark by
it's
the
a good food.
management,
You will enjoy.
and then we'll move on the Q&A round. So I would
Yeah,
like
hi.
to hand over the call to the management. Yes, sir.
Very good afternoon to everybody. My name is Amit Sheth. I am the Managing Director of Focus Lighting and Fixtures. We can straight away start with Q&A and not waste time. If somebody wants to know the background and the brief, then can raise hand and I can continue with that.
Okay, so any participant who would like to ask question can raise their hand or put them in the chat box. We'll wait for a minute while question queue assemble.
अंदर जगह है उसमें अंदर
So the first question is from Hemant Agarwal. Please go ahead, sir.
Am I audible?
Yeah, Hemant, you are audible.
Hi, good afternoon, sir. So could you just, I'm new to this business. Could you just give me a background of the business? That would be great.
Sure. So we started way back in 2005. We made a private limited company. We originally started with retail lighting. In 2005, we brought certain European technologies which were not available in India. Till that, it was very unorganized, either German companies, European brands, or it was dominated by China. So we saw this gap and we decided that either it's a very cheap product or it's very expensive. And technology is not available to anybody because European products are not affordable. So that's where the success story started in retail. We started with two big brands in India. One was Shop to Stop and second was Future Group. They were the major brands. Then we added Madura Garments, Arvind, so on and so forth. Today, retail contributes to almost 50% of our turnovers. 2016, we ventured for new technologies in other verticals, and then we started home segment, premium home lighting segment in India. And 2019, we opened our first experience center in Lakshmi. Today, home sector is growing at the rate of almost 30 to 40%. And it has been one of the most profitable vertical for our company. After that, we ventured for infra, railway, and outdoor lighting. We have been not very successful with railway so far. Infra has been extremely successful for us, and it's also growing year on year by 30 to 50% with us. Outdoor, we are venturing into outdoor lighting. We have got worldwide exclusivity on the technology. We are disrupting the industry by solving certain bottlenecks for the industry. As I'm not going to very technicality because you guys will not understand it. And still, if anybody wants to know, we can discuss it. So outdoor, we got exclusivity. We should be launching the product for outdoor by March end. Parallelly, we started trade segment, which is the biggest and the largest segment in the country. 70% of the population probably is lower middle class and middle class. And that's the target segment now we have. And we are developing certain patented sustainable technology for trade sector. This is where we stand.
Thank you so much, sir. That was helpful.
You're welcome. Next question,
Thank
please.
you, sir. The next question is from Sangeeta Purushottam. Please go ahead, ma'am.
Yeah. Actually, I would like a little more color on your business because I'm completely new to the company. So if you could explain what is the lay of the market?
What is the?
what is the lay of the land as far as the market itself is concerned? Who do you compete with? What are who are the other players in each of the segments? What are the challenges in this? What are the opportunities? If you could just give a little more color to your business, how do you sell in each segment? I'm assuming that retail lighting is more a B2B business, whereas home is more B2C. So, if you could just go a little bit in depth into the details of the business.
Sure. So as you rightly said, retail is more B2B. I'll just go segment wise and try to make it very short. In brief, I'll explain. Retail. So every segment, why focus invest in any vertical? The idea of investing in any vertical is if we see there is a technological barrier,
Right,
or and companies are not ready to introduce technology. So retail was the first segment wherein when we started, it was typically 8 watts per square feet was the lighting load. We brought it down to 3 watts per square feet
right,
with the technology what we introduced, and that is where the success story was written for us. Today, we work with average 1 watt per square feet with this new technology in retail.
right,
When LED, we were the first one to introduce LED in retail in India. The first stores were executed by us with technologies bought from Switzerland and Germany.
right,
Today, we have introduced technology where we are able to save 40% on OPEX in LEDs as compared to the LEDs what are sold in the industry. And
right,
this is what driving us. So we are basically a technology company. When
right.
it comes to home segment, home is not B2C for us. Home is also B2B for us.
Okay,
Typically, we work with channel partners
right,
and they do projects with architects, interior designers, lighting consultants. And
right,
that's where they get the business. We open experience center, which helps them to showcase the technology what we have.
right,
Whatever today we have in home lighting is again, it is technologically driven and they are patented products.
right, right.
Yeah.
And
And
sorry, do you have where all do you have experience centers? Hello, hello.
Amit sir, are you there?
hello.
Yeah, I think we lost you in between. So my
Yeah.
question,
So we have experience centers in Bombay, Ahmedabad, Bangalore. These are company owned experience centers. We are opening in Delhi and Hyderabad. That will also be company owned. Otherwise, we have in most of the cities with our channel partners.
right, right, okay. So in the home segment also, is your USP technology or is it design? What exactly are you offering?
So it's a combination of technology and design.
Right, okay, okay,
Yeah.
and right, all
As
right,
I told you, we will not invest in any vertical if we are not disrupting the industry. And we feel that industry can only be disrupted if there are certain bottlenecks in terms of technology and if we can solve that. And in terms of design, design in particular for home sector works a lot. So most
right,
of the products are also designed by international designers, mainly from Belgium, Germany, Austria.
right, right. And are you manufacturing in India? What is the import content?
We are manufacturing in India. Uh, Most of the components, except for the technical components, which are called optics, they are not manufactured today in India. Uh,
Okay,
Coming in future, we'll be manufacturing optics also in India to cut down on the cost and improve the profitability. Till
right,
competition is concerned, we have competition in retail. We have competition from local players, regional players. State-wise, we have competition with. There is no organized player today in India when it comes to retail. When it comes to home, because we are in premium segment, so our competition is mostly with European companies in India.
right. And in terms of pricing, how are you priced vis-a-vis competition?
So retail certainly we are expensive. Uh, that is why we say that the OPEX, we save on OPEX and their payback period is somewhere between 2 to 3 years time. In
Right.
home lighting, we are cost effective as compared to international brands, which are available in India. In infra, we are 30 to 40% lower as compared to international brands. We are not comparing here with China. In India, there are no manufacturers. Even large companies, they are more of a trading companies. What is left out? Outdoor. Outdoor, we are still not launched, outdoor and trade, but we will be at par, or will be uh, in trade will be slightly expensive than the top five companies, because there also we are disrupting the industry in terms of design and in terms of technology.
Right. Okay.
Yeah.
Thank you. Thank you. I'll come back in the queue.
Thank you, ma'am. We'll take the next question from Vinay Rokadia. Please go ahead, sir. Vinay sir, are you there?
Hello.
Okay.
Yeah. Can you hear? Is it audible?
Yeah.
Yeah.
Go ahead, please.
In the last call or in your note also, you mentioned that we are working with some airport authorities also. So can you give some color? What's the order size, or what's this? At what stage we are in phase one or phase two? And
Sure.
and regarding the channel part, this experience centers.
And then,
As on date, how many experience centers do we have in total, company owned plus?
I've already informed on the experience center, so I'll go to the next question first. What was your question on the airport? So we have registered with Airport Authority of India. Currently, we are executing. We have executed Delhi 100%. Delhi Airport. We are executing currently Bombay Airport, which is a new airport. We are executing Guwahati Airport. We are trying to sign up a rate contract with Adani for all their 17 airports. Today, there's a survey done as we are talking, and we are giving them a proposal. We are doing before and after, what is their existing and how we are solving their problems, and we'll be showing it to them in another 2 months' time. If all goes well, then they have assured that we'll be going for the rate contract. Yeah, airport, we are becoming one of the strong players. We are only Indian company to execute airports. Most of the times, the airports, I'm talking about the large airports. There are very small airports also, which local companies do it. But most of the airports, there are either international companies or big companies. They bring something or the other from China and they execute it. So we are today technically only Indian company to bag prestigious orders like Delhi and Bombay. In terms of order size typically for an airport, it varies from 10 crores on a minimum side to 50 crore. It is on phase wise. So every phase is 10 to 12 crore average size. Yeah. For example, Bombay, just to give an example, Bombay, we are doing phase one. Phase one was 8.5 crore for us. There are another 3 phase left. And there are outdoor lighting, they have still not ordered. So that is in pipeline.
Just to add one more question regarding in the last call, we said that all the receivables will be cleared by September, October. So is it on track or we are just lagging behind? Or if you can just explain something on that.
It is on track. It is getting cleared. There are a good amount of receivables, almost 15 to 20% receivables have been cleared, and it is an ongoing process. It is getting cleared.
Okay, so we can expect by Q3 it will be on track.
It should be on track.
Okay, thanks a lot.
Thank you, sir. We'll go with the next question from Raghav Agarwal. Please go ahead, sir.
Yeah, hi, am I audible, sir?
Yeah, you are audible.
Right. Thank you for the opportunity. My first question is that I was just going through the annual report and I saw that approximately 50% of the revenues are labeled as to be coming from trading. I wasn't very sure on what this trading business is. If you could throw some light on that, that would be helpful.
So typically when we manufacture, when we outsource manufacturing, unfortunately, we put it under trading. Yeah, but this is specially designed developed for us. There are fixtures which are 100% manufactured in our factory, rather assembled in our factory. and there are products which we outsource our manufacturing that comes under trading.
Understood. And do we plan to move this manufacturing in-house, or are we strategically inclined to get it
No,
manufactured
it's a
from?
strategic move from us. There are products which is more competitive if we manufacture outside, and there are products which it is much more profitable to manufacture in our factory. So that's a strategic decision what we as a company take.
Understood, sir. One more question I had on the infra side of the business. So in previous con calls, we discussed that we were expecting a sizable volume of business coming from the infra
It is
projects.
still going on. Infra, there is a continuous business that is coming to us, and it's an ongoing process. These are government tenders, some private tenders. Uh, Once they have all the approval, and then it goes and moves further.
Understood. And my last question was on the home segment, sir. So in Q1, we saw that the
My
home
request is
business.
that if we can ask only 2 questions because there are 141 participants, 44 rather. So others will not get opportunity.
Okay, no worries.
And not
Thank
to
you.
repeat the question so that others can ask other important questions.
Thank you, sir. We'll take the next question from Ankur Gulati. Please go ahead, sir.
Bhai, how's the trade sector segment playing out? I mean, when do you expect that you guys will be able to launch? And second, how do you plan to manufacture for trade? Do you have to set up a new factory or will do some type of a tie-up?
Thank you for your question. Trade, we've been through with the design for the trade. We are in the process of getting design registration and patent on certain products which are innovative. We should be able to file it by December. Tooling, first phase of tooling should be completed approximately by March or by April, and we should be able to launch subsequently trade segment, trade vertical.
And what about manufacturing? Do you need a separate plant for this given the volumes?
Given the volumes, technically, if any company is getting into trade, they need to set up a manufacturing facility, a separate manufacturing facility. We have a spare capacity of 40,000 square feet, which will be utilized for trade vertical, which is used currently for stocking our raw materials. Second thing, we've been working very hard in the sense that typically a trade product takes 6 to 7 minutes to manufacture and assemble it. We have reduced the assembly time from 6 minutes to 30 seconds. Okay, the products have been innovative. Design has been done in a manner that we can assemble single person can assemble a single product in average somewhere between 20 to 30 seconds. So we don't need any spare capacity as of now with the current given volume for coming 3 years.
Okay. And the last question, which is a bit technical, is this the same? I think you guys were acquiring some technology which basically cuts down the heating and everything. So is this what you're planning to launch now in trade?
That is what we are doing. Yeah. So
Right.
these products are more sustainable. We are using some special materials to cut down on the cost also. It is much more sustainable and the manufacturing processes becomes much more faster. Sustainability is still not very important today in India, but big companies are already moving in those directions. When it comes to outside India, especially mature market like Europe and US, so the first thing what they are talking is sustainability.
But this product trial which you were doing with your trade guys, that at least the trial is done, right? So they've accepted product as such. Now it's about getting scale.
It's just about getting the toolings done and start up the scaling process.
All right, thanks. All the best.
Thank you, sir. We'll take the next question from Agastya Dave. Please go ahead, sir.
Audible, sir?
Yes, you are.
Thank you for answering most of the questions already. Sir, I'll ask just two. One is, sir, what's your capacity utilization as of now? And
I've already answered that. Capacity
so
utilization is 40,000 square feet. 40,000 square feet we have spare, which will be utilized for outdoor and for trade.
yes, sir, I was coming to the actual question. So, the incremental 40,000 that you will do, what would be the capex cost for that?
So we have already invested on the capex because we are into lighting business and same machinery, same tools have been used to manufacture it. Same lab has been used. We don't have to reinvest on the lab or machineries extra. Maybe one or two, but it's not very sizable. The biggest investment will be going into tooling part, which will be a very large chunk. We'll be investing on the tooling part. What was your exact question?
So my
On the
exact
capex
question is
only.
that, yeah, on the capex only, historically we used to see that there was a capex cost per unit was not decreasing that much, but the realizations were declining for the industry as a whole. So is that phase over now?
So no, I didn't get your question. The capex was not.
Okay, so let me put it differently, sir. Going forward, if I take a five-year picture for the company, will your asset turnovers improve or will they remain steady?
Okay, what I understood, I'll try and answer that way. So in terms of capex, the capex will increase because we are entering into trade and outdoor lighting, which we assume will be one of the largest verticals we'll have in our company. In terms of absolute numbers, I'm not sure whether we can discuss these numbers on this platform or not. I have the actual numbers with us, and we'll be doing some fundraising in some sort or the other to raise this money.
So my question was more to do with the asset turnover, whether the revenues will improve, revenues per unit capex would improve, or will they remain steady, or will they decline?
Yeah, so the fixed assets are the same, right? We are not increasing on the fixed assets.
Okay,
Oh,
thanks, sir. Thank you.
yeah, we are using the existing place for assembling and
Thank you, sir.
manufacturing. Yeah.
Thank you.
Thank you, sir. We'll take the next question from Rohit Priyadarshi. Please go ahead, sir.
Hi, good afternoon. Thank you for the opportunity. Am I audible?
Yes.
Sir, I want to ask about the operating margin that we saw an expansion in post 2022. Like in 2022, we had somewhere around 9 to 10% of margins, but post that we have seen 20 and 21%. So my first question is, what specifically brought this margin expansion? And second is this margin sustainable?
Amit sir, are you there?
Sorry, I had muted by mistake. So certainly when the volume goes high and your fixed expenses or the operating expenses are not increasing at that speed, then the profitability improves. And that was the reason we had a jump in turnovers. And we've been able to sustain or increase the turnovers. So that is what has added to the profitability. Our GP margin, what we were working in between 2019 to 2022 was the same, or we have improved it by 5 to 10% on GP. But that should not, the jump what we see is purely because of the turnover what we had. Going further, when it comes to outdoor, we'll be able to maintain the profitability, and it should not be a problem. When it comes to trade, we will not have this type of profitability in trade. Trade is it's more of a commodity product, and what we are introducing is technology and design. First time in trade, which non-Indian company has done as of now. But we will be able to improve our margins as compared to our peers. We should be able to maintain in 3 years time. We should have average GP of somewhere between 55 to 60%.
Okay, sir.
And a net profit of somewhere we should be in between 10 to 12%.
Okay.
That is a wish list. Then what happens on the ground level, I don't know. Currently, we're working on those targets.
Okay. Thank you, sir. Thank you.
Yeah.
Thank you, sir. We'll take the next question from Gunit Singh. Please go ahead, sir.
Hi, sir. So my first question would be regarding the outlook for FY25. So looking at the current order book, what kind of top line and bottom line growth do we expect in FY25 over FY24?
We should be able to maintain 20% growth year on year. The real jump will be when we introduce trade and outdoor. That's the time we will see the real jump happening.
Sir, and in terms of operating margins, would we be able to maintain 22%?
I've already answered this just a minute before. If you can jump to another question, please.
All right. So, sir, I would like to understand what percentage of the products that we supply are manufactured by ourselves. And sir, in my understanding, we are only present in B2B where we do projects on a project basis. So, sir, when you say trade, can you please elaborate? What do you mean? Is it supplying products to, directly B2C, or what? I mean, what does that?
So out of all the verticals, only trade is supposed to be B2C, and we will have distribution and dealer network across the country. As told in past also, we are not clear whether we will do OEM, but that is something we are seriously looking at. If we are doing OEM, we will have margin pressures. And that is one of the reasons we think for the long term, we will have large volumes, but we will have margin pressures. So for the long term business goal, we are seriously thinking to go with our brand and to scale it up in an organic way. What was your second question? Yeah.
What percentage
How much
of-
is manufactured?
Yeah.
How much is manufactured by us? So everything is 100% manufactured by us. Either we outsource or we manufacture in our factory.
All
There
right.
are very few times. So in every project when we do, there are some times that not all the products are available with us, and there's a requirement that we have to outsource certain brands to fulfill those requirements. So that is where the trading comes. It fluctuates between, according to me, it fluctuates between 10 to 20%.
All right. So, I mean, mostly the LEDs also that we use are manufactured by us, or contract manufactured by us. So, sir, currently, what percentage of our revenues comes from the trade segment? Hello, I'm audible.
We have not started trade, as I informed in previous questions. We'll be starting it. We'll be launching it post March.
All right, sir. Got it. Thank you very much.
Thank you, sir. We'll take the next question from Rahul, sir. Please go ahead, sir.
Yeah, hello. Hi, sir. I have a question with regard to your Singapore subsidiary. I see that in FY24, the margins on your Singapore subsidiary are almost close to like 47, 48%. Could you please elaborate on this?
It's a project business. If we have some projects in hand, it just shoots up. We've been working in Singapore from way back, I think from 2018. We're trying to have a good foothold in Southeast Asia. It's just not Singapore. So it's Southeast Asia. And somewhere we are seeing the results on it.
Yeah, because a 48% margin on PAT is just like absolutely amazing. So, like, are you like supplying your?
It's a matured market when it comes to Southeast European countries, US, and there the margins are much better than as compared to developing countries.
Okay, a follow-up to this, and that's my last question. So I noticed that in the annual reports, you've been reporting the Singapore revenues for quite some time because I think it was established in 2018. But I noticed that in your investor presentation, FY24 is the first time that you actually mentioned revenues from the Singapore geography, which is like 25% of your FY24. Before that, you were never reporting revenues from Singapore. Is there a
No,
change
we have
in
always
how
been reporting. I think we've always been reporting. There have been some minuscule numbers what we were doing. Okay, as I told you before also that ours is a project business. All of a sudden there was a surge in our business when it comes to Middle East also. And though Middle East we do a fair amount of retail, but there was a large volume which we created in home sector. And there was a question asked in previous calls also that will this revenue continue? This revenue is a project business, so we don't know if some project is coming to our channel partner and that channel partner is working with us, then that revenue comes to us. So it's a cyclical thing. Yeah, it is not necessary that it will continue and it will steadily grow. What we are looking here is the overall growth of our company in terms of whether we are able to grow by 15 to 20% year on year.
Right. So my final question. So with regard to
two questions, please. My request because there are too many people and it's already half an hour done.
Yeah, sure, sir. Thank you.
Thank you, sir. The next question is from Pankaj Povade. Please go ahead, sir.
Hello, am I audible?
Yes, you are.
Yeah, thanks for taking my question. So just wanted to understand, where do you see yourself in, say, next 2-3 years down the line?
See, as I told you before also, we were into project, we are entering into trade. Honestly, there are a lot of positive assumptions we as a company have. We do a lot of market survey, we do a lot of feasibility study before entering the verticals. Last 2 years, we've been very bullish on the railway, but unfortunately, the railways have not gone the way we are assuming it. But if you see overall track record from the day we have started our company, we have an average growth of 20 to 25%, and we are very happy to maintain that track record. Going into future, there can be 1 or 2 years where we will have a little bit of dip up and down happening. But if you see an average, we will be growing by at least by 20%, 15 to 20% year on year.
Okay.
Again, trade, any company which is organized in trade, okay, their numbers are all about 300 to 1000 crore. Okay, so that is one of the reasons why we are entered trade, but we are not talking on those numbers because the ground reality is very different. Trade is going to take a lot of time with us because we are just starting. We are not a brand. We are going to develop. We have to create a brand image. We have to spend a lot on marketing, on creating network. So that is going to be a time process. So that's the reason we are not saying that we'll be growing by 100, 200, or 300%. We want to maintain figures which we can sustain and which can be easily we can achieve it.
Right.
Anything extra that comes is a bonus for us and for the investors.
Sure. Is there any scope for us to avail any PLI benefits?
I really didn't get this question. What do you mean by that?
So just wanted to understand if there is any scope for us to have the benefits of PLI, wherein we produce and sell inside in India and export outside.
We are exporting to Middle East, to Southeast Asia. We have serious plans, not today, but we have serious plans to enter to US and European market. In fact, this year we are starting very strongly to study US market, and that's the whole idea. The reason why we have taken exclusivity on the technology for outdoor, because outdoor is one of the largest market worldwide in terms of sheer value, and we are disrupting the industry in terms of there were so many bottlenecks in technology, and we are solving all those problems in outdoor industry. So of course that's the whole idea. Otherwise, we would have taken exclusivity only for Indian market and not for the whole of the world on this technology.
So you mean to say you're talking about the patent, right?
There are two parts. One is the exclusivity on the technology, and second, getting patent worldwide. Patent worldwide is a very expensive affair, so we are understanding. It's a detailed discussion. If you want, we can discuss it. But the idea is that we'll be patenting it worldwide.
Sure.
But it happens in phases. What I'm trying to say is it doesn't happen that you just file a patent worldwide and it happens. The patent happens in phases.
Sure. Thank you, sir. That's all from us.
Thank you. We'll take the next question from Kasis. Please go ahead.
Hi, Amit. A couple of questions from my side. Firstly is towards the home vertical. So last year we did a business of around 70 CR. First quarter was relatively lower, but if I assume a 20-25% growth on a full year basis, will that be correct?
Sorry, 2025, what will be correct?
20-25% growth on this home particular.
Yeah, that's an average what we are growing, and we are focusing very hard on. So home is premium home segment, what we are focusing very hard on, and unfortunately, there are not a single company who is manufacturing and giving technology what we are providing today in India. So we see a great opportunity today in India.
Okay, great. Thanks. And second question is like we have 4 or 5 verticals like retail, home, infrastructure, railways, and we are targeting to enter into trade segment also. Do we have a separate business head, separate leadership person over there, or is it a single person who is taking in charge of all the 5 departments? That would
So
be helpful.
trade and railways, we have a separate team, separate people who are handling it. When it comes to infra retail, it's one team who is handling it currently. Once it becomes sizable, then we make a separate team.
Okay, sure. Thanks a lot. Good luck for the future. Thank you.
Thank you, sir. We'll take the next question from Chirag Shah. Please go ahead, sir.
I said just if you can just clarify on the working capital side, your EBITDA is growing, but conversion to operating cash flow is not happening. I understand in the call you have indicated about receivable issues, etc. But if you can just sum it up, because there's a bit confusion. It is driven by which sector, and how should one look at it going ahead?
Chirag bhai, sorry, I'm not from the finance side. Tarun will be the right person to answer this. He was the CFO of our company. Unfortunately, he's not on this call. Okay. So my request will be if you can send this question by email, within 2 working days, we'll answer this.
Yeah, the
If
reason
it's
is
fine with you.
okay. Thank you.
You're welcome,
Thank
Chirag bhai.
you. We'll have a follow-up question from Gunit Singh. Please go ahead, sir.
Sorry, I forgot to lower my hand. But sir, I have the same question. I receive debtor days have gone up from 70 to 140, while revenues have not increased in that tune. So I mean, I just would like to understand by end of FY25 what level would we be at, and why have our trade receivables like almost doubled this year, and what steps are we taking to, I mean, reduce them? And
So
what
this
what
question,
main contributors to this? I mean, this is not clear to me yet, even though you
so
might
this
have.
question has been asked repeatedly, and in this forum also, on this call also, somebody had asked this question that are the trade receivables improving? Uh, Please understand that we are in project business. Okay. Typically, where the receivables have gone higher is in the large projects what we have executed mainly in Middle East and Singapore. Those trade receivables have just started coming in. We've been able to clear by this month whatever the outstanding are almost 20 to 25% of the trade receivables. And by this year end, we should be able to clear it. At the same time, infrastructure projects, when we are doing government projects, government uh, does not pay us 100% once we supply it. So it is supply, then installation, and then OEM. O&M. O&M is something we take a contract of operation and maintenance also for 5 years time. So there is a percentage which will always show as an outstanding on the books, but that is O&M. But we have received our money for the material supplied. Once it is 100% supplied, tested, and installed. For example, just to give you an example, we did Surat Fort. Surat Fort was a project somewhere worth 15 crores. Today also we have an outstanding of 5 crores. We are expected to receive 3.5 crore by next week. This is what, because now they have started, they are running it and it is running seamlessly. But there will be still some part of outstanding which will show on the books, but actually that's not an outstanding, that is operation and maintenance, which we receive it every quarter or every 6 months, whatever the agreement is there on the purchase order.
All right, so got it. So, sir, I want to understand. So, would the receivables from government contracts or contracts from Middle East and Singapore continue to be the same way going forward?
No, it depends. It depends whether we are working on with government. Government, this is a system already explained. There are projects which we are doing with our channel partners. When we are doing it with our channel partners, it's a long-term relation. It's not a short-term relation. See, as a company, we are worried that when there is a delay in payment. Secondly, those payments should not be bad debts. Okay. If you see our track record also from the day we have started, our track record shows that our bad debts have been in point in decimals. Okay, it is not. Why it is in decimals? Because whatever jobs we do, it's not one time. If we do some private job which is one time, there are chances that they will not give the feedback or they will not respond on the payment. But here it's a recurring business, whether it is our channel partners or whether it is with the government. Money with the government is always a secured money. It's not a problem. Indian government is the most secured money what we have. But there are regulations, there are processes which you have to follow, and you have to get your payment done. When it comes to private, what happened where we were stuck with our channel partners? The only problem with the channel partners, they had not executed. But there has been a lot of discussions that how they can clear it. The project was not executed. We have supplied. They have supplied. They are also stuck, and they are not as large as us. So they are dependent on getting the payment. Sometimes because of some process or some approvals from the on the site they have not got and they have not been able to execute, and the client has not paid to them in return. They have not paid to us. But again, the payment is secure, so we are not worried. And still, the payment has started coming in. They are clearing it, and we there is a 20-25% cleared. We are expected another 20-25% to be cleared by October, November. So we are not really worried about it.
All right, sir. So is it safe to assume that, I mean, this is a one-off spike and I mean, what kind of debtor days should we expect by the end of FY25?
Or debtor, somewhere it will be somewhere between 60 to 90 days. That will be an average. And if the infra projects improves, okay, the datas will go to 90 to 100 days also.
All right, so got it. So that is a marked improvement from 140 days currently.
Yeah. This is one of the spikes we got, unfortunate part.
All right, so got it. Thank you very much.
You're welcome.
Thank you, sir. We'll take the next question from Satya Mehta. Please go ahead, sir.
Thanks for the opportunity. Just had two small questions. One is on the railway side, which said that we are in the process of transferring from the development vendor side to the approved vendor. How is the progress on that, and where are we?
We've already got the approval from the railways on the now we are an approved vendor for most of the products with railways. Unfortunately, with railways, what has happened is there has been a very tough competition when it comes to tendering process. There are two types of business in railways. One is private players like Alstom, companies like them who buys from us and manufactures for railway, and one is direct railway. Direct railway, we have a price pressure. Today, the pricing is so low that we cannot afford to do business with them. So we are currently focusing on private players. We have just started focusing, and we are hopeful that we'll be able to get some traction out of them.
Got it. And so we expect a significant chunk of revenue and improved margins on the railway side in the coming quarters.
Currently, at least for this year, we are not very optimistic in spite of we getting approved as an approved vendor. Purely because the prices, there is a tremendous price pressure in railway. There are a lot of wrongdoings also happening in railway, wherein what is our purchase and manufacturing cost, it is supplied below that cost. So there is a quality compromise, and that is something railway has started taking action on that. So when that action will be taken, when the vendors will be blacklisted, once that is streamlined, there will be a significant jump in our turnovers.
Right.
Currently, as an individual, I'm not very bullish, if I have to be honest with you.
Understood. And the second question is on the side of we were in conversation with some partnership with some of the airport development players like Adani and others. Is there some progress on that? Are we expecting some?
I've just answered this. That was the first question. I've just answered that.
So sorry, I joined late. I'll maybe catch up on that later.
Yeah, sure.
Thank you.
Thank you, sir. We'll take the next question from Kunal Mehta. Please go ahead, sir.
Yeah, hi, sir. So can you just throw some light on the total order book that you have currently?
Typically in our business, we have visibility. We don't have order booking, and I've been telling this in every call whenever we have, and at least one or two investors have been asking this question. So typically we have visibility from when it comes to retailers. The retailers, they give us a visibility of every quarter that this is, and the order comes at the 11th hour to us. Home lighting, there are no order bookings that happens. Okay. The architect or the client finalizes it, we get the PO, and we have to supply it in 2 to 3 weeks time. And channel partners, home lighting is more working right now with our partners. And it is like a day-to-day process. When it comes to infra, we have an order booking of 33 crores. That's the only area where we have order bookings also. That is 33 crores what we have right now. And what visibility we have is more than 150 odd crores.
Okay, so the total about 150 plus 30 is 180 crores.
Yeah, this is the only No,
Okay.
this is the
The
visibility.
visibility that you
The
have right
order
now.
booking
Okay.
is only 33 crores. Please don't
Okay.
confuse it.
Okay. Okay. Okay.
Yeah.
Yeah. Okay. Thank you.
Thank you, sir. We'll take the next question from Hemant Agarwal. Please go ahead, sir.
So I just wanted to ask, what are the type of margins that we get in the different segments like retail, home, infra, and railways?
So retail is average 40-45%. Home is average 60%. Infra, it fluctuates from somewhere between 30 to 60%, depending on whether we are working with companies like L&T or we are doing direct business with the government. If it is through L&T, there are margin pressures in infra. Outdoor and retail, we are expected to work with average 45 to 60%.
And so in the coming future, when we start the trade business, what would you want to keep the share of trade and project segment in the future? Hello?
Currently, the business plan what we have made for trade and outdoor lighting. Trade, we are expected that we are already doing infra, so that is outdoor. Outdoor comes under infra. And
Okay.
whatever products we are developing is based on the visibility what we have, which we are bidding for somewhere around 100-150 crores, what we are bidding for it. Okay. So, but when we get the order, till trade is concerned, we are expected to do somewhere between 30 to 50 crore for the first year.
Okay. Thank you, sir.
Yeah.
Thank you, sir. We'll take the next follow-up question from Ankur Gulati, sir. Please go ahead.
Yeah, I've asked my question. That's fine. Thanks.
Okay. We'll take the next question from Pankaj, sir. Please go ahead, sir.
Thanks. My question has been answered.
Okay, sir. We'll take some chat box question.
Yeah. The first question what you mentioned about scaling each vertical, namely retail, home, and infra, trading and railways, each to 60 crore very shortly. Where are we are doing it? So retail and home, we are already doing it. Infra is also very close to it. We already have a order booking only in that vertical about 30 crores. This year we should be somewhere around 50 odd crores in infra. Trade has still not started as yet. Trading will take some time to start. As I told in my previous questions, somebody was asked. Railway is we don't know. We are not very bullish. This is what we answered. There's a question from Mr. Dilip Vora. How much of your revenues come from manufacturing? How much from the trading? Does your business have any sort of moat or any barrier? Kindly explain why any other brand cannot sort of come to in the market. So I don't understand what you mean by MOAT, moat, and do your business have any sort of moat or any entry barrier? So in lighting industry, there are no entry barriers. What we are doing, there are entry barriers. The industry works on white labeling. So there are few manufacturers who manufacture for the whole industry and they just put their brand name, and that is how it works. Most of the time, it's a trading industry. It's not a manufacturing industry here in India. We are the only manufacturers. We are the only company who is investing very heavily on technology and on the design part. So that is what it makes an entry barrier. If I have understood this question correctly, how much of the revenue comes from manufacturing? How much it comes from trade? I don't have the exact numbers in hand, but approximately you can say 70-30. There's a third question from Raghav Agarwal. FY24 110 crore of 220 crore revenue and 34 crore and 45 crore PBT came from trading. Can you please throw some light on the trading business? I've already told that we are not doing trading. We are getting it manufacturing outsource of products which we don't want to manufacture inside our factory. Then there is a question. Can you please talk about technology aspect and what realm of differentiation you as a company. So we are getting into how do you cause disruption? Disruption is mainly caused when you are solving the problems in the industry, and this is what we are trying to do. We are trying to solve problems which companies are facing in each vertical. Okay, done. We can see. Or acha. So there are bottlenecks and problems what we are solving in the industry, and that is what is giving edge to us, and that is why we are getting it patented. In terms of trade, we are going away from aluminium. The density of aluminium is 4 times to the material what we are using it, so the cost anyway reduces by 4 times, and we are improving on the assembly time, which further reduces the cost. We are improving the product design. To give you a simple example, the bulb design which has been there from last 50 years, nobody has thought to reinvent the design. Today we are completely disrupting it by reinventing the complete design of the bulb, which is a commodity item which is sold more than a crore pieces every month. And that we didn't want it to just take a common bulb and just brand it and get into the market. So this is where we are working. Second disruption we have done is we have eradicated any metal parts in bulbs or any products what we are using. Even electric conductivity is being done through this special material, and the manufacturing process has been improved. So the cost is also not going high. So this is the strength what we are doing, and this is the changes what we are bringing in. Okay, then there is a second question. We are going aiming 60 crore for infra project from Ahmedabad, Surat this year. How value we have won so far, and how many we are expecting for 2025. 2025, we should be able to double the turnovers in infra, especially in infra. Okay. Infra projects are happening all over the country. Our focus is mainly in Gujarat sector, and this is the visibility what we have. Home segment, there's a second question from Raghav Agrawal if he is available here. Home segment revenues have dipped very drastically. No, the home segment revenues have not dipped very drastically to best of my knowledge, but still we'll double cross check and give it to you. In fact, it has improved. It's other way around. Then there is a question I'm skipping one question from Raghav Agrawal, going to Hemant Agrawal. What are the types of margins in various segments like retail, home, infra? I've already answered that. There is a question from Prem Lunia. Can you please explain how do we serve automobile customers? Is there more showrooms lighting if lighting in the cars? So we don't do lighting in the cars. We do stores for automobile industry. Today we have absolute monopoly in automobile industry. For the retail stores, we would have executed more than 1,800 stores for Tata Motors. We are a single partner with Mercedes. In India, we are doing projects for Mercedes in Middle East and Africa. We are the only vendor from Asia who has been given exclusivity with Mercedes, and we are the only vendor from Asia who's been allowed to do export for Mercedes. And what is the current capacity and utilization level? I've already answered that. There is a question from Mr. Rohit Priyadarshi. Hi, sir. I want to ask about the expansion in margins. Which segment helped us in increasing the margins? It's mainly home and infra. Resha Mehta daters saw sharp. I've answered that. And margins from single digit to FY 2023 double digit 20%. I've answered that. Design revenue mix from retail, home, infra, railways, margins, working capital. This is also answered. Okay. Satya Mehta, how is the progress on railway side? Yeah, as I answered it, we are not very bullish right now. We've been approved. This is also answered. How much do you want to keep the share of trade and project segment in future? We are very bullish about project and infra and trade business. But once we enter the battlefield, we will know where do we stand. But as a company, the way the products have been shaping, the technology is shaping up, we are very, very optimistic about it. Who are our competitors? From Rohit Priyadarshini, we have answered. Which segment has shown most growth in operating margins? It is certainly home sector. Second sector is going to be infra, which we are working. And third segment should be outdoor lighting. There is a question from Mr. Mayur, Mumbai Airport order execution. We have received the work order. We don't know when they want the material at site. Tentative, they have told that by Jan we have to execute it. Sir, were the margins that you mentioned on the various segment on EBITDA basis or on GPM basis? No, what I've been talking about is gross profit margins and not EBITDA level. EBITDA is somewhere around, I think 21-24%, somewhere around that. Yeah, there are too many questions and I'm little exhausted.
Yes, sir. Due to time constraint, we'll have to close the call. I would like to thank the management on behalf of Arihant Capital for sparing time and sharing insight about their company. If the participants have any further doubt, they can get in touch with the team of Arihant Capital. Thank you, sir.
Thank you very much for everybody for attending this call. If you have any other questions, I've not been able to answer all the questions on this call. Please feel free to write to us and we will try our level best to answer as soon as possible.
Yes, sir. Thank you, sir.
Thank you.